This is general advice, my opinions, and for entertainment purposes only. CFDs are high risk, past performance isn't reliable. I may be long or short CFDs and stocks mentioned. Content may contain language that offends some viewers. Righto, punters. Welcome to Matty's CFD Fund Update. And for all the YouTube people out there, I've chucked the first episode up on the YouTube for free for you to have a look at what LEVRD's all about. LEVRD is me punting everything I've fucking got in a CFD account, running my own long-short hedge fund. And you wouldn't believe it, since the 25th of November, I'm up and I haven't fucking lost everything on a margin call. Yet. CFDs, everything I've got. What could fucking go wrong? So, if you want access to all the LEVRD stuff, in addition to the fund updates, we've got long, short episodes, market open, me going off my head when I'm up or down. Go to LEVRD.live, get the bloody Google Play app, the Apple app, whichever bloody one you want. She's got all the bells and whistles, and links are in the show notes. So let's rip into Matty's fund update. Hold on. What do we call it? Oh, no, so I did have a name for it, in and out. We'll get on to, I'll fix that fucking next time. Here's where we're sitting. So, long exposure, 606. Short exposure, 383. So I'm about 61.39 long short at the moment. I don't want to be too fucking long, even though everything's going up, because if it all goes to shit, I get margin called and I fucking lose everything, because for the 250 I've got invested, there's nearly $1 million in play. So if 25% swing and I'm completely fucked. So, gold sitting a bit net long. Gold is absolutely ripping at the moment. So, net long on gold. Uranium, I've only got one uranium position at the moment, and you'll find out which one that is. Copper, couple of plays there, pretty neutral. Now, I've got some miscellaneous. So, as you can see here, I've got a bit of lithium iron ore combo with MinRes and Liontown. I've got Centaurus, got Yancoal. So, overall, net long, started with 180. We're sitting at bloody 257. 257 fucking thousand bucks. You bloody ripper. So, look at this for fucking annualised returns. 42.9% up since the 25th of November. Fucking put that on an annualised return. We're going all right. But subject to change without notice very quickly. I could fucking wipe out 20% in a day. So we'll see. We'll see how we go. So I am going to go through every bloody stock that I've got in the portfolio, what I'm thinking for them, and where, if I'm going to close, hold, fucking go more, go long, go short, whatever. So let's rip in. So let's have I'll show you what the portfolio is looking like. Top position, which is fucking burning me at the moment, Bellevue Gold, short. So that has just been on a freaking run. On bugger all, no news at all, but bar the gold price, and it's outperformed all the goldies. So that one's bloody hurting me at the moment, down 23%. And I've probably got way too much in it because I did keep topping it up because I didn't think it'd keep going up. We've got Nexgen, that's the uranium exposure. Then we've got Ramelius long, Torque Metals long, Brightstar long, Capricorn MinRes long, Liontown short. That's fucking bloody fucking burning me today, that motherfucker. Jesus Christ. Northern Star short, which was perfectly timed, you would say. We've got Yancoal long, Centaurus long, Westgold short, 29 Metals short, Gorilla Firefly, New Murchison long, and a tiny bit of Ora Banda short that's just been open. So I'm going to go through in sequential order, largest holding to the smallest holding. Let's go through what I reckon's going on and what I'm fucking punting on. None of this is me telling you what to punt. This is me punting my own money, my own ideas, entertainment purposes only. So, did a bit of movement before this episode. I actually closed the Regis short. So that was, I think, the first trade I ever did on LEVRD was long Ramelius short Regis. So Regis I just got to the thinking they got that much fucking cash at the moment and they're going to be generating cash. Yes, they haven't got the future production underpinned by fucking reserves, and production by consensus is dropping off considerably, but they could just go into fucking cash harvest mode and not buy anything and do a buyback and just fucking harvest. So I lost a bit of conviction in that short, but Ramelius outperformed it, so I was comfortable with that. I did open a short on Ora Banda. Even though I bloody like where that company's going, and Lukey Cray's a bloody legend, I think it's under a bit of short-term pressure just from a funding perspective, and I'm going to go into that, but it's a very small position at the moment. So added some more long Capricorn, the gold market darling, added more long Yancoal, and added more short Liontown, which is fucking real handy because lithium went up fucking 8% last night, the motherfucker. So, yes, anyway. So I'll get into more detail. Now, I've got an underlying investment thesis that I'm going to go through that's going into the quarterlies. And this is what it is. And it is around the people that make the fucking rocks in Australia. The people, and there is mining is booming at the moment. There is fuck all people. They're very hard to find. You ain't got to talk to everyone in the industry. And when you've got trying to find a fuckload of people, you got to put all new people in. The people quality as a whole in the industry will decline. You can only have so many good people, experienced people. You start bringing people through, and the whole people quality changes. And you've got FY26 guidance numbers being set last year before it's booming even more now, based on like a near perfect execution, you'd say, for these companies. And the people struggle and trying to get bums on seats is going to put a lot of pressure on guidance numbers for the producers. And we've just seen, and I'm going to go into it later, and this is on the back of Northern Star downgrading their guidance. Yes, they all were said as isolated issues, one-offs. There's always one-offs, but my hunch of what the industry is going through at the moment is people struggles. And that's going to put pressure on delivering targets. So, and I'm thinking it's more maybe an underground issue than an open pit issue. Underground's very technical. Operational mistakes can have a huge impact. And I'm thinking, am I lower risk going long developers more so and short producers more so? Because I have to be hedged. I have to be fucking hedged so I don't get margin called. Unless me fucking shorts go the wrong way, which is what Bellevue's doing at the moment. So that's the underlying theory of what the thesis is. I'll still have producer longs, but I'm got a lot short as well. So let's get into the first one. We've got Visible Alpha. Finance bro. I am now a fucking finance bro. So let's get into it. Bellevue. I'm going against fucking consensus here. It's actually trading above consensus as of today. Consensus price is $1.73. And I think it's bloody $1.78 today. So there is a lot of buyers on it, probably because the bankers want to do a bloody raise for them, no doubt. So, summary, that's the charts up here. You'll see sort of where I've come in, and I've topped up, and then it fucking kept going. Hence why I'm pretty bloody exposed here. So, I'm hoping that because it's risen so much, no one's going to fucking take over the company, because that would really fuck me. And I'm hoping that guidance is effectively priced in for execution. And you can see down on the TradingView chart here, that is all the Aussie gold producers relative since I think Bellevue released their quarterly numbers for September, and Bellevue has outperformed every single one of them on no really company-specific news. There hasn't been much. They said the Deakin Main's going on single heading, scheduled for Q4 stoping. That's their future prediction. They've extended the mining contract for 7 months. I'm thinking there is risk around that contract, if it doesn't get renewed to develop and given to another contractor, that always creates disruptions on a mine site. That's more an FY27 problem. But if there's and ahhing and on site thinking who the fuck's got the contract, that puts pressure on getting shit done on site for Q3 and Q4. And that's all going to be happening pretty much as of now. There's going to be a tendering process for the FY27 onwards contract. So And so based on all that, based on it's going up, I'm still holding. I reckon their numbers will be out soon for what they've got. They need to get 130 to 150. That was their downgraded guidance. They only got 29,000 in Q1. Consensus has them requiring 34.4, 37.7 and 40,500 ounces for the remaining 3 quarters. So they are starting to reduce the hedge book, though it's still 537 mil out of the money at today's spot price of 66.41. I think that was yesterday. I think it's even fucking higher today. So they're going to start delivering into that each quarter to reduce that. They've still got the bank debt. The repayments commence this year, and with the hedge book delivery also increasing. So will they raise money to clear some of that FY27 hedging and some debt while their share price is high? So everything needs to go right. I probably wrote it there, but that's fucking cut off. There we go, right. So that's what's happening with Bellevue. Next position, Nexgen, the uranium deposit that fucking means everything in the world. Nexgen, the 30 million pounder per annum humdinger that the whole world is depending on for nuclear energy. So I still love me uranium. Plenty of chat going around about Nexgen potentially being acquired post the final permits, which should be coming in around February 2026. So she's just had a bit of a breakout, and that was on the back of last Friday. The Cameco term price increase was a bit of a good uranium tailwind. So I've bought at the fucking high, but it is the one that matters. And so you've got one CNSC hearing to go. It's like they've recommended that they're qualified to operate. Next one's coming in 26. You've got Cameco always sandbagging the shit out of them, pretty much, hopefully because they want them cheaper. Hopefully this is a fucking catalyst for a fucking Nexgen takeover for Matty's hedge fund. You fucking ripper. And like, you have a look at this fucking thing. It is going to absolutely print cash, but this will not be operating in 2030. Fucking, it will not be operating in 2030. Not a fucking chance. And I'll tell you why. These fucking ventilation shafts here, that's 700 metre ventilation shaft. That's on good digging, 3 metres a day. On bad digging, 1 metre a day. Let's say 2 metres a day, just for a 7. So that's 1 year just to blind sink the shaft. But prior to that, you have to freeze the ground. You have to get all the long lead items, buddy. So that's about the exact same time as sinking the shaft. So that is easily a 3-year project just to get a shaft down. Then you've got to go back in and you've got to do all the freaking development off the shaft to get all this infrastructure in, all the paste backfill bloody established. Like, that is not going to be in production until mid-2030s. So don't forget the 2030 thing. I can just fucking guarantee it. Unless there's bloody something halfway down that they can start mining, that will not be getting mined in 2030. So if it is, I'm going to look like a real dickhead. But based on some talking to people with a lot of shaft sinking experience in the Athabasca Basin itself, that's where we're at. So next, cab off the rank, Ramelius. So along that, up by 18.8% on that position. So it is actually trading above consensus now. So on the back of some, I guess, positive capital allocation, 250 mil share buyback announced. That started Boxing Day. You just saw one there. I think there was a gold down day and they dipped in. So that's going to really help with reducing the volatility of the Ramelius share price. The fundies love a good buyback. Even though 250 mil is pretty small compared to the fucking size of their market cap, it is going to help with keeping that share price a bit more steady. And it's just started actually ripping nicely on the back of obviously gold price increases, but the buyback as well. And the dividend's been increased from 1 to 2 cents. They did upgrade the consensus price target on the back of that. They do have $118 million likely being paid in this December quarter for income tax, and they still have a bit of 17,000 ounces of hedging to deliver at 32.07 an ounce, and that's about 31% of their production in this quarter. So there is a bit. They're not in free cash flow generation for this quarter, and you can see by the consensus numbers from Visible Alpha Finance Bro World, they ended with 790 million, but they're only going to end up with 633 by consensus at the end of December quarter. So because you can see the tax payments, you've got capex lifting on the back of, you've got never being developed. This is all in Ramelius's hands now. You've got Mount Magnet mill expansion to integrate the Dalgaranga ore into it. So you've got a bit going on there. You've got dividends to come out. So they're sort of not going to have as much cash, but they're building towards, and this is the humdinger with Ramelius. They've got pretty much FY35 out to then, potentially with 500 to 550,000 ounces underpinned by current reserves. And that's not many companies can say they've got production out to FY35 underpinned by reserves and relatively high grade feed. So especially like the Dalgaranga reserve, which is, look, we'll see once it starts coming out, but 7 million tonne at 7 grams for 1.6 million ounces. So fucking high grade. I'd take 5 or 6 grams just coming out of there, to be honest. So there we go. So that's Ramelius. And as I said, between the tax payments, the hedging, it has underperformed. I'll take you up to bloody Trading View, and I will show you relatively what I mean. So if we go, let's just go a year. So Ramelius down the bottom here, as you can see, up 96%, but look at Pantoro, Resolute, Regis, Genesis, Catalyst, Volt, they're all up over 150%. Ramelius is only up 96%, and that's had a bit of a lift recently. And same on a 6-month basis. Ramelius is a bit better on 6 month, probably because we've just had a bit of a recent rise. Ramelius on a 3-month basis about 6%. So you can just see on the year basis there, that's sort of where I'm going. I reckon it's still got a bit of performance left in it, and they deliver. They meet guidances, and that is the thing that fucking separates them from a lot of other companies. They fucking achieve guidance. Until they don't, which will be probably fucking now because I own the bloody thing. So, Carosue Dam, don't think it's going to happen. I don't think Northern Star are going to get rid of Carosue Dam. It's it's probably one of their fucking better assets in Australia at the moment. That's a $3 billion deal at these prices, at least. The Northern Star would be better to fucking spin it out than sell it to Ramelius for $1 billion. So, and Ramelius aren't going to pay a ridiculous amount for it. So I think Rebecca Rowe will be a mill built. I don't think buying Carosue Dam will be a big dilution event for Ramelius. So yes, we'll see how we go. Talk Metals, TOR. So this company it's been going sideways for a bit now. It had a big fucking re-rate after the Aston merger, and everyone bloody got in and made a fortune, but she's sort of been tracking sideways for a bit now. I think that is possibly because since that Aston merger and re-rate, it's been a year, so you got possible selling for the CGT benefit for a lot of people that have made a shitload of money, and it's just been tracking sideways. And if you stack it against, I'll read them out because you probably can't see these: MI6, New Murchison, Mika, Gorilla, Ozgold, Astral. And then you got Torque, Brightstar, Black Cat, Magnetic. So Torque's underperformed a lot of them. Especially MI6, but yeah, New Murchison's generating a lot of cash. Mika's producing, so but Torque and Gorilla are pretty similar, you'd say, in exploration wise. So yeah, underperformed, but they're just in an absolute prime location in the goldfields for fucking people like Westgold, Goldfields, freaking even Wyloo, like bloody anyone. It's and they've got 250,000 ounces already at 3 grams. A lot of that, like there's probably 150 you could friggin' pit very easily, 150 to 200, all on active mining licenses. They're finally funded. They've got a $15 million bought deal at 30 cents. They've got aggressive drilling plan for 2026. Hopefully this means more than fucking 2 rigs. They've been probably piss-farting around a bit. Need to start hammering this friggin' thing. And they talk of early work streams to progress to production. So, and look, the last drilling announcement was 13th of November. So low news flow frequency in the past 2 months. Hence why it's probably trading at the same price as August 2025, sorry. And yeah, just hoping that this bloody funding will see drilling, MRE upgrades, bit of news flow. Like we've got friggin' 5 metres at 15 grams to follow up on, 16 metres at 5. Like that's just a Triple H. And I'll go back. Like you look at some of these hits, like 15 at 12 grams, like 5 at 27. Paris is the main humdinger. Yeah, there is no reason that this should not be a bloody plus 1 million ounce deposit once they start drilling it and defining it. And you just look at the region it's in and who it's near. You've got St Ives, 63 k's away. This is where the dirt could go to if they just started mining it, which they should be now. You got Higginsville, Westgold, 65 k's away. You got the old Jubilee mill that needs a refurb, Northern Star, but I heard is there going to be a deal? Someone's going to pinch that off them at some point. Probably hard to do a deal with them. I'll have a sip. I'm getting a bit dry. 3 Mile Hill Focus, probably that's 100. You're getting to the ones that are 120 k's away. But even truckable to Norseman for Pantoro, 124. Lakewood's probably too far away, 138. And you look at the size of these, like, it'd be tough to do a deal with Goldfields. That's the closest one, the St Ives mill. Slow moving, but that's 4.2 million tonnes, so there's probably plenty of room in that fucker. Higginsville, Westgold are talking about expanding that. That is the most likely one, I believe. 2 million tonne per annum, talking about expanding it to 4. The other ones, probably less of a chance. They should fucking buy the Jubilee mill and refurb it themselves. But yeah, I'm just hoping some fucking news flow comes out and this friggin' stock can get fucking pumping. I don't know. It's in a prime acquisition location, so I'm holding it in fucking hope. Next up, speaking of hope, Brightstar. So, Brightstar, long, up 10.8%. You want to talk about underperformance of a share price? Brightstar is probably the main one. This is relative to MI6, New Murchison, Torque, Mika, Ozgold, Astral, Black Cat. Brightstar's 15.2% over 6 months in a rising gold price, and probably underperformed on a share price basis for a few years now. They've done a lot of deals to build the business they've got. They did obviously the Brightstar King West, but the Linden deal, the Oraman deal, the Alto deal. I probably fucking missed some, but they've done deals non-stop. So a lot of raising, a lot of merging, a lot of dilution, but they've created they're producing gold and they've got a consolidated 2.4 million ounce resource in the sandstone, and they've been pretty fucking flat. So they did have some negative news come out at Christmas. Pretty much lost 1,600 ounces in their milling campaign with Genesis at Mount Morgan. So recovery reconciled lower than what was announced. So that was a bit disappointing because they effectively probably net lost bloody 10 million bucks there in 1,600 ounces. So don't know what's going on. Fucking told joys of toll trade. Don't know. So hopefully, based on the August campaign being 91%, hopefully it returns to that and they lift that. It'll be some big eyes on it next time. So the sandstone drill. And the sandstone is what I'm in Brightstar for. That's So consolidated now with the Orman stuff in because they did Alto and Gateway, got Montague off Gateway. Now they got the Orman stuff. So 2.4 million ounces. And they're infill drilling the piss out of it at the moment to lift the indicated component up from 22%. You'll see a reserve, I would say, come out on the back of that with a study. So if they can release a reserve of fucking 2 million ounces at, 1 and a bit grams, that will significantly, I believe, fucking re-rate the stock. So that's what I'm fucking in it for. And then you've got Fish and Second Fortune producing down at Laverton. So the business, you could say, somewhat, it's like it's cash neutral in a way that anything coming from the mines is going to be fed into exploration at Sandstone and to pay for the business because they've developed a fucking actual business. There's 150 people that work there. It's not just a explorer and piss farting around. They're building a producing business. So, and it costs money to run them, but I believe all the pieces have been put in place to finally, hopefully, get this thing fucking humming. So, the risk is a large equity raise to fund the mill build at Laverton. I see that as probably they're going to be always priced come raise. I don't know if that's how you spell come raise, but that's just how I'm spelling it. It just seems like the right way. I think they've always been priced that way. And look, even if they did do a fucking decent size equity raise and took away a bit of the equity overhang to build their own mill, because they're underperformance, it might actually re-rate it and it actually starts fucking flying because they've got a proper production story because they've still got Lord Byron, Cooktree Well, fucking to these pits that are on MLs ready to be mined, but they don't want to be sending it toll treat and they want to put it in their own fucking mill. So the opportunity, I reckon, as I said, I reckon Laverton and Menzies are in the business for free because you got the Sandstone with 2 million ounces up at the Sandstone. Possible M&A target from the companies Sandstone could easily, depending on how big you want to build it, that's anywhere from 100 to 200,000 ounce per annum project, depending on how big you want to build the mill. There's plenty of there's a 10-year mine life at friggin' 200,000 ounces. So that's a big project, and I believe that's a fucking that will be a target for mid caps that are wanting to add that to their ounce profile. So if they can release a fucking 2 million ounce reserve in the Sandstone at 1.3 or 4 grams or something, should see a bloody good re-rate. And I just see it as having lower execution risk as the business has already been established with 150 people. So if they're already got fucking processing manager, they've already got fucking underground managers, pit managers, they've got a recruitment team, they've got a HR team, they've got they've already built a business so if you're going to talk about ramp up risk, they're already working mines, so their execution risk should be lower than someone else trying to do it. So that's my view. So we'll be remaining long there. Capricorn, the market darling, the market darling. That's a good one. So where are we trading at? They are consensus price target still $16.30, trading at about $14.40. So pretty flat there. So mate, anywhere bloody old Dan Morgan from Barrenjoey, he's got an overweight at $19.50, and he's had a couple of underweights on in this period. So that gives me a bit of confidence, I reckon. So they're, as I said, the gold market darling, and they're just one of those ones that if a generalist fund wants a safe gold bet, and they say, what's your 2 safe picks in gold? Capricorn would usually be one of them. And you got Mark Clark spearheading the company. You got his brand behind it. You got Carla Winder expanding from 4.5 to 6.5 million tonne per annum. They bought all the Mount Gibson stuff. They bought that for $39.6 million. So, and they've just taken over Warradar, and I think they bought Yalgoo Tenements as well the other week, to expand that Mount Gibson footprint. And they've just had consistent free cash flow generation, and you're just confident in them executing guidance. And I'll show here, so from Visible Alpha, not IG, yeah, fucking dickhead Matt. This is FY 23, 24, 25, free cash flow, actuals, 105 mil, 92 mil, 160 mil. And they were in periods when the gold price wasn't the fucking gold price we've got today, where not many other companies could make bloody free cash flow. Capricorn consistently made free cash because they hate fucking spending money, which is sensational. So they've got the hedge book fully closed now and debt-free, so they've got absolutely full exposure. And this one probably, this chart, this graph from their prezzo I did like, it just shows that from, 2021, that they were producing an all-in sustaining a bit above 1,000. So they had a, $1,500 delta to the gold price. But even with the gold price running up here, you haven't seen their all-in sustaining costs trending in that fucking same direction. Yes, they've gone up probably 50%, but look at the delta they've got now. So they've kept their costs low, and they should put themselves, even though they're only producing, 110,000 ounces, 120? Like they can still generate a lot of free cash producing not as many ounces as fucking the big dogs. So you've got, these are the ones I like. These are, I call them common Capricorn pub comments. Like, how has a 120,000 ounce producer got a market cap of $6 billion? It's due for a pullback. What happens if Clarkey leaves like he did at Regis? Wait until the free dig finishes at Karlawinda. They can't keep their costs low in this environment. These are all the common ones. And I'll tell you what, I've got some answers for it, actually, for each of them. Possible answers for the 120,000 ounce producer. It's like, well, they're going to eventually produce 300,000 ounces per annum at the lowest cost in the probably Aussie industry. Does that make them equivalent to a 500,000 ounce producer because they're producing at such a lower price than fucking someone that's near $3,000 all in sustaining? You could look at it that way. It's due for a pullback. Well, they were saying that at $6, it's now 14. So you could keep going, even though I'm fucking short some stocks that I'm hoping fucking pull back. But anyway, I might get fucking burnt there too. So what happens if Clarkey leaves? Well, Clarkey currently has $240 million worth of stock. Who's going to buy that stock off him close to the current market price if he's leaving? Fucking no one. And they'd have to get taken over for him to get it. So his best bet's to generate free cash and give himself dividends. So wait until the free dig finishes at Karlawinda. I'm pretty sure they've managed to keep the costs low anyway, would be my answer to that. They can't keep their costs low in this environment. Probably same above. They seem to be able to keep their costs low better than any other company because they fucking hate spending money. So FY28 consensus, this is what they're looking at. So 276,000 ounces, like this is Karlawinda expansion, a bit of Mount Gibson coming in, free cash flow of nearly 800 million. So that's where they're heading, and at an all-in sustaining of 2,000. So Minrez, fucking good old Chris Ellison. Got to have him in me portfolio as a long. And she's done all right, up 17%. Consensus is at 47. It's trading at fucking $55. So, but with what bloody lithium is doing at the moment, so I got in down here and she's just, steadily fucking continued. Good on you, Chris. So lithium's getting volatile. And it's probably a lower beta option for me to play lithium in a way, as a long, because fucking lithium, everyone wants to believe lithium. Who knows? It could fucking keep going up. It went up 8% last night, the spot price. So I've paired it against Liontown as a short. And it's, I know, only sort of, you could say half a mineral, I think, on the NAV basis. If you combine the mining services and the lithium sector sort of together, it's sort of half lithium, half iron ore, you'd say, for the NAV, because you've got to include the mining services component that services the lithium part of the business. So it's much bigger than a bigger company than Liontown, but it is my way of a lower volatility option of playing lithium if lithium does get stupid. And they've got Iron ore's pretty flat. Any positive news in iron ore is going to fucking help them because they're such a low, high cost producer. They've got the high debt, which gives them massive leverage. On top of the leverage I've already got, which makes things great. Obviously the risks with MinRes, you get the media just want to get a hold of Chris Ellison. They're just pulling themselves over any story they can get. And that just creates pressure on the stock. You got bloody Onslow disruptions because it's all go there. It has to be flat out for that to execute. China restarting lepidolite mines. So that'll be a negative for the lithium, but I've got it hedged with the Liontown short. So even though the Liontown short's fucking outperforming the MinRes share price, unfortunately. So opportunity, as I said, high talk to the iron ore price. They've got a lower grade product, higher unit costs with third-party infrastructure. So any lift in iron ore should fucking benefit MinRes significantly. Any positive lithium sentiment? Why not? Which is happening at the moment, but it hasn't really kicked up like Liontown has. So I'm a bit fucking behind there, but I'll ride the volatility. Why not? We'll fucking be boring if you didn't. Speaking of which, Liontown. Short, I'm down 4.3% on that one. So probably a bit more today because these were yesterday's numbers. Now, and you look at, they're like trading it. I think they're $1.80 today and consensus price is $1.16. So that's just absolutely ripping. And we're just in that period at the moment. We're heading into quarterlies. All these, like this bull territory fucking stocks going off their head. There's the last significant pieces of information we've got from every company were in October. And we've just been on a commodity price run. We don't know what the fucking cash balances and everything are going to be and the execution of guidances and everything, and which is all going to come to the table fucking in the coming weeks, which is going to be bloody flat out. So hence why you've got fucking stocks just trading well above consensus because they can't really update their fucking numbers, I guess. So they've obviously got high debt, so they're very levered to lithium. And you've got spodumene price up 89% in the last 3 months. That's probably up 100% as of today. Trading 46% above consensus. Mate, the generalist funds, they love lithium exposure. Like, they'll be like, fuck, I want to play lithium. I think it's coming back. What do you fucking buy? They'll be like, oh, well, what do you buy? Pilbara, Liontown, fucking bit of MinRes maybe, IGO. That's just the Aussie ones. Get a bit of core in you. So, like, there's not heaps to fucking buy. So that's what, that starts getting the fucking fund flow that sees this fucking stock prices go up like this. So anyway, I've got in at the current top. I topped up a bit the other day. We'll see what happens. I don't think the Gina M&A is going to be a thing. I'm hoping. She's already got Andover, so why the fuck would she buy bloody Liontown as well? And she loves rare earths too much at the moment. So I don't know. I'll have egg on me face, but with the share price, why didn't she buy it when it was friggin' 90 cents? I don't know. If there's another bloody lithium crazy price increase, that'll really fuck me. But I'll just say there's so much potential worldwide supply for lithium. It's just such a bulk thing that is everywhere. And China could just, as I said, their bloody lepidolite mines could start restarting. That Jinchao mine, which I think is about 7% of global supply, they could just fucking, once that can turn back on, I know they're having a bit of delays with that getting approved to restart, but once that turns back on, that is always a for the spodumene price. So, Liontown's in a high-cost underground mining environment, so that's going to put pressure on future debt repayments, I believe. Oh, God, why wouldn't you? You got that balance sheet that they've got and you're back up at $1.80. Why wouldn't you fucking raise money? I think they raised in August or something. It was around Diggers, actually, I think. Should have fucking raised more. Go clear some of that fucking debt. So, yeah, I don't know. That could happen. There's so potentially in it for that. Northern Star, this one come a right short, up 4.8%. So, look, consensus is still trading at $30. Stock's trading at about 24.43. So, it is 6 buys and 3 holds. But they did do the guidance downgrade. This was pretty well fucking flagged by some of the banks, and pretty much they went down 10% on the day. I'll go into what the details were. Pretty much said total sales were 348,000 ounces, resulting in first half of gold sales of 729,000 ounces. So they revised their production guidance down to 16 to 1,700,000 ounces, down, which was originally 1.7 to 1.85 million ounces. So, and they haven't released cost guidance yet. That's going to be released in the quarterly. Obviously going to be fucking higher. It's going to be a negative free cash flow quarter. Had a primary crusher failure at KCGM, so only sold 110,000 ounces there. And they're saying throughput's going to be variable for half two during the transition to the new mill. So they do say the high-grade gold and Pike North dirt stockpiled and ready for processing. Had troubles at Yandal. Jundee crushing circuit repair took longer than expected. Thunderbox, lower mine grades from Aurelia pit and a CIL tank failure. They've actually, it says they've reduced some of the mining fleet at Thunderbox. That must be in the open pit. Pogo only sold 53,000 ounces. They had higher mining dilution, it said, from both development and stoping, which I found interesting, mentioning development. But effectively, what they need to achieve is KCGM needs to sell 145 and 155,000 ounces in Q3 and 4, and this is after only selling 103 to 110. This is to achieve the revised midpoint. Yandal, so your Jundee Thunderbox, they need to sell 131 and 135 after only selling 113 and 91. Pogo needs to sell 70 and 74,000 ounces. That's only after selling 65 and 53,000 ounces. So effectively, all of their operations and regions need to significantly outperform what we've seen in the past 2 quarters. So I've maintained the short. I didn't close it out on the back of that. I think once the revised costs and everything come out and possible pressure into their Q3 performance, I'll be maintaining that, and it's probably not it's the most low beta hedge I can use to hedge any gold longs effectively. He's getting fucking dry, Jesus Christ. Righto. So, possible issues. As I've said, this is a huge, goes to my thoughts about the industry and the people, but like it's just a huge business requiring a lot of people. Got a lot of contractors that require a lot of people that they're dependent on. People quality declining as a whole just because there's so many new people. You have to bring in bums on seats, and maintaining that is a huge job for corporate and on-site management. And Pogo just appears to be very variable as well, possibly like whether that's an ore body thing, a dilution thing, like an execution thing. They've done such a good fucking job of Australianising, if that's a word, the Alaskan mining over there. But just seems to be hard to string it all together, even though it has been going very well. Yancoal. I'm in the coal trader. Good on you, Matty Water. I've subscribed to the Coal Trader Substack because I know fuck all about coal, so I'll let Matty Water tell me. And when he fucking says he reckons Yancoal's too cheap, I've listened. So I bought fucking Yancoal. Try to keep it simple. 80% of their revenue is from thermal coal. About 85% of the tonnes, 20% of the revenue is from met coal, which is about 15% of the tonnes. Most of the thermal stuff's down in the Hunter Valley down here. Moolarben's their biggest one. They got the biggest ownership and exposure of. Then you got Hunter Valley operations, Mount Thorley, Warkworth, and then some stuff up in Queensland. So they've obviously they're very fucking, you couldn't get a more Chinese company, obviously. But you look at their history from FY22 onwards, like that was when coal was fucking flying. You can see that chart here. This is the coal price, 22, 23. Have a look at that. Fucking thermal coal, $400. Now down back at 106. Significant fucking drop. So, and on the back of that, you can see the cash and cash equivalents, like the dividend payments, 1.6 bill, 1.4 bill in 22, 23, like fucking huge amounts of free cash flow. So, but they're still maintaining by the end of this financial year, they've got consensus has got them having $2.5 billion in the bank. So I think they were net. I'm pretty sure it was 1.8 at the moment. But anyway, so they're like I think a third of their fucking market cap is in cash. So it's just looking at fucking thermal coal prices, bloody absolutely in the doldrums. Fucking thermal coal fucking ain't going anywhere. You can talk about building nuclear reactors for data centers and fucking everything and using gas and wind and everything. Thermal coal ain't going anywhere anytime soon. And this one is a pretty bloody solid exposure to it with, from what I've read about their thermal coal assets, good quality assets that have a lot of cash in the bank. And it's, I guess the overhangs, who buys Kestrel? They've got the EMR bloody sale of Kestrel at the moment. Hasn't been finalised. Is Yancoal in the process of looking at it? Who knows? It's said they are. Would they get FIRB approval anyway if they bought it? Would they overpay for it? So I think the shareholders effectively want them to not buy it and return to distributing that fuckloads of cash they've got back to shareholders, so which will obviously see the dividend, but then a re-rate in the share price due to the capital management practices, whatever the fucking technical term is. So when it's, I got in at $4.98, so that's fucking, yeah, why not? Why not? Thermal coal exposure. Centaurus. Now, this one, me counter-cyclical nickel play. Unlike other people, I haven't had to wait too long for Centaurus to start going up. I literally fucking got in down here. And bloody, she has started ripping up 40%. You want nickel sulfide exposure? This is it. And this equity research report come out in December. This is like when I bought it from ICBC. And it was pretty much talking about nickel being perceived to be oversupplied, but the actual Indonesian nickel output versus actual production quotas was very small. So there was a lot of quota hoarding. But they were going back to annual quotas in 2026, and it was looking like the Indo government was going to make it harder for licensing in an attempt to reduce output and lift the price of nickel so that their royalties as a function of price of ore would increase, because they want more bang for buck for the ore that's coming out. So, and look, literally fucking on the back of that, you see at the end of December, it was pretty fucking bang on, because Indonesia have cut by 34% the expected volume of nickel to be produced for next year. So that's fucking, I think it was 2.5 million tonne taken out of the market. Like it was, a lot of nickel taken out. So, and Centaurus is just ticking along. They've just raised money in August, $23 at 36 cents. They're trading at 60 now. I'm sure they would have fucking liked to have raised it now. They do have the copper gold exploration underway at Boy Novo. So it'd be nice if they hit a fuckload of copper and gold there. That'd be handy. And you've got this fella promoting the living fuck out of it on YouTube, Term Oil Incorporated, which is Rick Rule. He is fucking every freaking YouTube thing he goes on, he's pumping the fuck out of Centaurus because he loves the hated stuff. And that Term Oil Incorporated, the 4.7 million shares, you Google that Term Oil, that is Rick Rule. So he's fucking loving it. So if they can get the major catalyst for Centaurus would be selling a project stake, so selling 20 or 30% to take away the equity, the overhang of the bloody funding, how they're going to fund this project. So if they can sell that to a friggin' downstream provider that's looking for non-Chinese Indonesian nickel, that's going to fucking significantly re-rate that, and they're going through that process of trying to get that funding solution away, which will be likely a project stake sale. So we'll be maintaining. Westgold, short, 9.8%. Now, everyone's probably like, why the fuck are you shorting gold producers that are potentially making heaps of cash in this rising gold price environment? Well, I don't know if it's going to fucking rise forever. And if it doesn't and it pulls back and I'm long all fucking gold, I get margin called and lose everything. So I have to fucking short something. And I'm not going to, I could have made shitloads of money if I was just long everything since I started. I would have bloody tripled the balance, but I could have lost it all as well. So hence why I've got to try and find which bloody producers are at risk of potentially not meeting guidance, even though, look, 4 buys, who, like, everyone would be like, why are you shorting that, you fucking dickhead? But it's had a brilliant run. I got in up here, and it's been fucking re-rated from $3 to $6 in, fucking less than 6 months. So they released that 3-year outlook detail on a production scenario of, potentially 470,000 ounces from FY28. Market got an absolute stiffy over it, but I look at them, I reckon they're the opposite of Ramelius. Like, they've got a history of not meeting guidance. They had sort of one good year where they did fucking meet it and had a good re-rate, but historically they've had trouble meeting guidance. And with my thesis on the industry, I believe that is what I'm playing, that if they don't meet guidance, it will, feed into the short position. They've done a bit of spinning out recently. They got rid of Reedy, Comet and Mount Henry in 2 separate spin outs to, it's like this Valiant IPO, then sent one to the Mount Henry to the Richardson Street stable, the old Parsons joint, Alicanto. So go Jeff Sansom, fucking good on you, Cobber. And I think there's more of them to come. You'll have Peak Hill, you'll have Chalice as well, which is down near Higginsville. So I'd say there's some more divestments coming. So, and they've retained stakes in each of these as well. So that's a positive for Westgold, because it's reducing their holding costs of these assets. It's got a shitload of ground. But I just believe from a guidance perspective, their FY26 guidance, 345 to 385. Now, that includes the new Murchison ore, so they're a bit behind on what they've got already, but the new Murchison ores started flying in, and they're taken above the ore purchase agreement maximum tonnes. And that indicates to me that fucking Bluebird needs dirt. It fucking needs dirt, because they're taking as much of the new Murchison stuff as they can. Bluebird's tough going with ground conditions. This is going a bit back now, but you see the low votes on issuing performance rights to the MD, and the potential approval of potential benefits actually got voted down. So when you see that, you just see, shareholders aren't happy, and you wonder why they're not happy. Not all of them aren't happy, and so 49% aren't happy. That's all. And you just wonder why. So that's just usually a bit of a flag as well. Now, 29 metals, short. But copper's been fucking ripping, so it's ripped me a new arsehole a bit. So this is sort of hedged against the Firefly long. Why would I short a fucking copper producer in a rising copper price environment? Well, fucking you got to short something, yes. They've had previously reported seismic issues at Golden Grove impacting production. This is the ones that are just reported. I would have a hunch that there's probably a lot of consistent seismic activity there that has to be managed. When you have a seismic event, usually you can't fucking, you either have to, if it happens, you exit the mine, and then there's a certain period for when you can go back into the mine before the seismicity has to calm down and be shown that it's safe to send everyone back down there. So that impacts production. So if you've got a lot of seismicity, I've worked at Golden Grove. It is fucking all of these things. It's hot, it's deep, it's spread out, it's seismic, it's got shit ground, it's got deviating ground. You drill fucking holes and they end up going a metre. You can't keep them straight. Hard to pull a development cut, and that wasn't just for me. That was for most people. I was shit, but fucking it was just hard to pull. You had to put that many reamers in the fucking thing, 8 reamers a cut, and sometimes that wouldn't even fucking work. That was for good operators. So it's just hard going, but the stock has 6x'd since April 2025, and it's been on a run. So that's, yeah, I'll start ripping through these last ones a bit. She's a fucking humdinger of an episode, this one. Gorilla Gold, long, 0.2, down 0.2, pretty flat. I think I got in at 40. I made money, but then I tried to trim and it didn't show up, and I trimmed it again, but it trimmed the whole fucking thing. So I had to rebuy back in up here. So, look, they raised $31 in October at 40 cents. They got 40 mil in the bank. Just waiting to see what funky thing they're going to get up to in 2026. It's just the fact that Simon Lawson and Craig Jones are both on the board, that fucking means something. They've got 3 assets. Potentially, I reckon there's a spin out coming or something, and hopefully being a Gorilla shareholder will give you exposure to whatever those 2 blokes are getting up to, because I reckon they're on the look for something. And you just look, even just Comet Vale, they just increased the mineral resource up to nearly 900,000 ounces at 3.7 grams, but you just look at indicated in the open pit, you've got 1.3 million tonne at 4.3 grams at 180,000 ounces. So, like, fucking go and get permitting and bloody mine that fucker. Like, that'd be, look at what fucking Pasty's done at friggin' New Murchison, the cash flow they're generating. Prime, it's obviously sitting, you look at the region it's sitting in. Prime for Mulwary and Comet Vale, logical for someone like either Ora Banda for Davyhurst to take that ground, feed it into their mill, or Norton Goldfields down at Paddington here. So be interesting to see. There's probably some M&A potential. Ora Banda, I'll get into them in a bit. They've got obviously, they're expanding their mill. They've got a lot of ground. They can service it probably with their own ground. They've got a lot of fucking drilling to do to find it, but bolting this on that it has already been drilled to feed in wouldn't be a bad idea. Share price is pretty fucking high at the moment. So, yeah, they could maybe tie in a deal with this and a cap raise. I don't know. But anyway, next one, Firefly. We're getting nearly to the end. Long up 7.3%. I went in around the raise price, $1.80. Just completed that fucking huge equity raise, 139 mil. They already had 105 mil in the bank, and they're still in the exploration phase, finding more copper. So 6 rigs underground, 3 on the surface. And, mate, you cannot get a better promotional team. The Richardson Street stable, they can fucking make everyone know about a stock. So this is heading towards looking like 100,000 tonne per annum copper mine. Like this, it's fucking, they're finding shit up closer to the surface. Like they don't have to go down deep straight away. Like a lot of capital to go into it. But if you can fucking there is 100,000 tonne per annum of high grade copper that can be produced at this, that will get the fucking attention of the big companies. So, and that is where this company is heading. New Murchison, NMG, long, up 17 and a bit percent. Got in here, should have fucking bought heaps more of the bastards too. I think I trimmed some, but look, they got the toll trading arrangement with Westgold, 15,000 ounces produced in 2 months. Westgold accepted over the maximum 50,000 tonne in their all purchase agreement. They took 67 in November, took 61 in October. Even just based on 17,000 ounces, Argonaut predicted 40 to 50 million in free cash, and they've already produced 15. So they're going to fucking, like, Crown Prince goes for, what have I got? Stage 1 and 2 is 2.5 years of production, and it's fucking high grade pit. Like, they're going to have fucking 200 million bucks in the bank soon, like just cash. So they're sitting pretty well. So that's sort of the way, and the way I was looking at that is, if I'm short Westgold based on Bluebird underperforming, but they're getting, I'm like, right, I should be long New Murchison, because if they're going to get the benefits off New Murchison, I want to get the fucking benefit of New Murchison, because if they're making money off New Murchison means New Murchison's making even more fucking money. So that's how I'm playing it. Even though it's a bit skewed more towards Westgold and the size of the position, but that's it's sort of a hedge. It's an internal gold hedge there. And New Murchison are all around Westgold. Their stuff's like all around Bluebird. They've got a fuckload of tenure. Don't know why Westgold haven't taken them already. They're obviously a strategic shareholder. But yeah, 530 mil market cap. Are Westgold going to use their script to incorporate them into the business yet? Not sure. Ora Banda, final position. Very small position at the moment. Look, this company's it's been on an absolute run. Like fucking back in August, it was 65 cents. Now $1.55 because it had a pretty big pullback. It's always traded with good tailwinds. You got Luke Craze, very highly regarded as a MD, absolute ripping bloke. And they added 38.5 mil last quarter and they got 122 mil in the bank. They're studying building a 3 million tonne per annum mill potentially, but they've only got 236,000 ounces in reserves. So, and you've got bloody unlikely to get bank debt to fund that. So cap raise at these prices would be a logical move in the start of the year. So that's what I'm banking on there. So, right, there we fucking go. That's bloody, I don't know how long that fucking went for, but oh geez, I'm dry as a bung arrow's back now. So, right, we're in the mix. Keep fucking note of this bloody number. Let's go fucking have a look at it. I bet you it'll be fucking lower tomorrow. That's what we're sitting at. 180, we're up at 257. Let's fucking, can you imagine if I get it to 7 figures? 7 figures from a CFD account. Or I might lose it all. Fucking, I'm working hard on that not happening. Righto. Give this a fucking share around for me. I'll chuck the fund updates on YouTube. If you want more, you want the rest of the videos, go to LEVRD.live. All the links are in the show notes. LEVRD 50 for 50% off any plan. Fucking, you got a 7-day free trial. I'm just a fucking good cunt. I'll look after you. Righto. Yeah, have a good one.